All right, folks, buckle up because today we're diving deep into Asana, the work management platform that promises to keep your workplace chaos under control. Spoiler alert, today wasn't exactly as smooth as their project management tool. Asana's shares took quite a tumble following their fiscal second quarter earnings report for 2025, causing whispers and chatter in the tech world. Let's set the stage. Shares of Asana slide down by around 6.3% after news broke out. That's not the kind of sliding you want unless you're on a water slide, right? Currently, the stock is roughly 90% lower than its pandemic peak. Ouch. So, what exactly went wrong? First, the revenue. Asana reported revenue of $179.2 million, up 10% year over year, which did beat expectations that were pegged at $177.7 million. Likewise, Asana experienced growth with customers who spend big bucks. Customers shelling out $100,000 or more grew by 17%, an indicator that Asana's appeal to high-value clients is definitely strong. Shutterstock images of pile-up dollar bills in corporate treasuries would fit perfectly here. But as any good chef would tell you, great ingredients don't necessarily make a great dish. Despite positive numbers in revenue and big spenders, Asana's financial picture wasn't all that great. Talking about losses, the company showed that its generally accepted accounting principles operating loss increased from $73.4 million to a gutsy $76.8 million compared to last year. The bottom line, Asana reported an adjusted per-share loss of $0.05, which, though better than the anticipated 8-cent loss, is still worse than last year's 4. And here comes the real kicker. Like forgetting to save your work, Asana's guidance moving forward didn't tickle anyone's fancy. For fiscal Q3 of 2025, they're eyeing revenue between $180 million to $181 million, which fell short of the consensus at $182.3 million. Additionally, they adjusted their full-year revenue guidance, capping it at $721 million from earlier estimates of up to $724 million. Expectations hurt as much as stepping on a Lego in the tech world. That brings us to a bit of silver lining. AI strides. CEO Dustin Moskovitz asserted that the company did make significant strides in artificial intelligence and was excited about ongoing enterprise transitions. The hype about artificial intelligence flying everywhere is real, and Asana wants a big bite. Moskovitz remarked, "In Q2, Asana continued to execute on our enterprise transition and make significant strides in AI. We're seeing momentum in key areas, success in key verticals, and a record number of multi-year deals." However, rosy words couldn't plaster the hard facts. Single-digit revenue growth and continued losses aren't exactly stock market darlings. To top it all off, Asana also announced bigger transformations within its own walls. Sonalee Parekh will succeed Tim Wan as Chief Financial Officer starting in September. A fountain of new leadership, new ideas, and all that jazz, provided it helps, of course. Sound familiar? Asana's the rock climber stuck halfway, resourceful and visionary, but still struggling to find that next stable grip to ascend. Investors are wary, and today's numbers didn't stoke confidence. Stay tuned and fingers crossed for those AI stretch targets and cost management plans. I hope Asana's next project is winning back some investor love. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.